Hey YouTube, Tactical Timmy here. I wanted to talk about silver's spot price spiking. Specifically, recently it has spiked above $30. It hit $32 the other day. It's come back down a little bit, but it's still north of $30. And what that effects will be on our portfolios and how it's going to affect us as the average silver and gold stackers. How does it actually affect us? Well, if you've already got your position in some silver, you're going to be happy about that position and you're going to be loving the fact that your investments are paying off. Granted, for a lot of people, if it's not, you're not at retirement age or you're not at a place in life where you need to sell, a lot of people are actually not going to be taking advantage of these higher spot prices to cash in on the silver spot price spiking. So it's really not going to affect them that much. The only thing it might affect them is when they go to make more purchases in the future and continue to further their position. They're actually not going to be able to afford as many ounces as they were in the past. Does this actually matter to the average silver and gold stacker? Yes, if you're in your accumulation phase, you're not going to be able to get as many ounces. What I hate seeing though is people in the stacking community, and this happens for people in the stock community as well, is I hate seeing people going out and changing their strategies based on price spikes or based on markets falling. This is a terrible idea because you can get caught up in what's going on with the spot price. With that, you end up making bad decisions. I saw this lots of times back in 2011 when the spot price was running up. People were trying to say, I'm going to miss out on some of these gains and I really need to get in to make sure that I catch these gains on the way up. Well, in the end, it ended up crashing and a lot of people bought a lot more silver at high spot prices, and it's just now come back up to where those positions were actually going to be making money. For instance, if I had bought this 2011, which I can't remember if I actually did buy this Eagle in 2011, if I had bought that at the higher inflated spot price, it'd just now be breaking even. Luckily, ever since then, and I've been dollar cost averaging for a long time now, and I've simply been buying over the years. So the amount of actual silver and gold that I purchased at that higher spot price back then was a relatively small amount. So what happens when spot price spikes is you have a lot of people rushing in and having that fear of missing out. And fear in the human mind makes us do irrational things. We can't have that fear of missing out on things or fear of anything and expect ourselves to make sound decisions. I worked at a bank for a long time and I saw people coming in, especially in 2020 most recently, and I saw people coming in with a lot of fear. What they would do is they were saying, hey, I just got to get out of these 401ks or their stock positions, even if it was small amounts. I'm talking people that didn't have a lot of money. I'm talking like $500, $300 in their stock portfolio or in their 401k, and they're saying, hey, I need to get that money out. And they weren't needing the money. They had their job, they were still working, they were still getting paid. It wasn't that they needed the money, but they were fearful that they were going to lose out on it. When the markets were crashing, they were fearful of losing out. What does that mean when markets are spiking? Because we also have seen markets spike over the years. That same fear creeps in. They fear that they're missing out on those price gains. And we have to take that into account. We have to make sure that we check ourselves. We know what our strategy is. We know exactly how much money per month we're going to be putting into different assets. We're going to make sure we limit ourselves to that amount and we don't get caught up in the hype train, because certainly it's easy, especially on YouTube, to listen to some of these silver stackers and listen to the gold stackers, and if you're into stocks, you can listen to some stock bugs that will really make a compelling case for any given asset class. I know that, recently I've gotten more and more into gold stacking, and I would love to listen to more why there are good reasons for buying gold, and maybe we should be buying more gold or having gold as more of your portfolio. And that's something that is good to learn about, but we need to make sure that we're making these decisions and making sustainable decisions that aren't going to affect us or aren't going to change when stock prices or when silver prices or when gold prices are changing and very volatile. When things are getting volatile, we need to make sure that we are sticking to a solid strategy. We're not changing things up, and we continue our strategy. For us, I know we talk a lot about dollar cost averaging on this channel, and the benefit of that is if you say, for instance, you only have $100 to invest each month, well, you'll take that $100, and if silver price was $10, well, you'd be able to buy 10 ounces of silver. If silver price doubles and that's $20, well, then all of a sudden you're no longer able to buy 10 ounces of silver. You're going to end up only buying 5 ounces of silver. So as that price rises, you end up buying less of that. And that would apply across all your asset classes. So you'd want to assign the specific amount of dollars that you're going to be putting into silver or gold, or whether it's any kind of equities that you're going to be getting into. Assign the amount of money that you're going to be purchasing those every month, and then go ahead and make sure you stick to that. And you make sure that you're not changing that just because one of those assets has spiked in price. Maybe even you want to focus on the assets that haven't spiked in price. That's typically the signal when assets are spiking in price. That's a signal for us that, hey, maybe there's some other asset out there that might be a little less overvalued. Once it actually spikes in price, it's too late for us to get into that market. There's the famous stock saying that is, you want to buy the rumor and sell the news. Once the spot price is out there and it's already started shooting up and you're seeing news stories about a certain thing, like for instance, we've been seeing a lot more hype about gold and silver recently. That's probably the poorer time to get into the silver and gold market. I'm not saying that we should completely stop buying our gold and silver. I think that we should stay the course, whether it's $100 a month or whatever you can commit to buying every single month. You should stick with that amount and make sure that you have that diversification. You're not just buying silver, you're not just buying gold. You have equities and you have diversification within your portfolio. That way, any one thing spiking is not going to completely ruin your portfolio. Just because silver has spiked up doesn't mean my complete portfolio allocation is going to be completely wrong. It's not going to change things that much. We have to stay the course and keep calm. Far too many people in the gold and silver community get way too hyped up and get wrapped up in the day-to-day price movements, and they don't focus on their long-term strategy, because that's what really counts. Is it long-term, and is it sustainable for us? Because that's what we really need to be focusing on. I hope that you found value in this story and in this video. I hope that if you did, you'll leave a like, comment, feel free to share this video, and subscribe. Take care.